Okay, so let me start over again. So taxation is one of the easiest, if not the easiest, papers out there in relation to ZiCA. So you just have to make sure you understand and you practice as much as you can, because the more you practice, the more you understand the concepts, and you'll be able to hammer and get very good marks in the exam. So topic one today is the Zambian tax system. So we're going to look at the Zambian tax system. So a brief introduction on tax. What is tax? So it's not really relevant information as much, but we can just look at it. So tax is basically a way that the government raises finance in order to provide goods and services to the people. So each and every country out there has got a tax system, because majority of the countries in the world, they run on taxation. That's how the government is able to raise finance to pay its civil servants and all these other national expenses. Apart from the Gulf states, I think the Dubai's, the Arab Emirates, the Saudi Arabias, that side, those don't have a tax regime. So those are the only exception, but each and every country out there, they've got a tax regime. Yes. So now, what are the roles and functions of taxation? So number one, tax is used to raise money for the government to provide public and merit goods. So in theory, when the government taxes companies and individuals, that money uh, is used to provide public goods as well as merit goods. For example, building schools, building maybe street lights, building roads in theory, but in actual sense, the government borrows money from other lenders. Yeah. So one of the roles of taxation is to raise money for the government to provide public and merit goods. Then two, to influence and stimulate economic activity by providing incentives to individuals and companies carrying out economic activities. So this one simply means to stimulate activity in the economy, the government can reduce the amount of tax that a company, for instance, a mining company, can be able to pay. So if the government can have a policy saying, okay, if you're a mining company and you're producing such and such amount of tons, we're going to give you a tax incentive of, let's say, you'll be paying only 20%. If the tax rate is 30, we're going to give you a 10% tax break and you'll only be paying 20%. That way, it's going to stimulate the production of that mine, because it's going to be paying 10% less of tax than the normal. So that way, it's going to increase and stimulate the productivity of that particular mine or any other company which has been given a tax incentive. Then three, equal distribution of wealth by taxing the rich and providing services to the poor. I'll say that again. Equal distribution of wealth by taxing the rich and providing services to the poor. So in theory, those people that earn a lot of money, if you tax them more, then the money that you get from the taxation that you give those individuals that earn a lot of money, you provide goods and services to the poor. That's in theory, but in actual sense, the people that make a lot of money, the business owners, they don't pay as much tax as the average individual. Yeah. Then three, uh, well-being of society by giving harsh regulations to companies that carry out activities that negatively impact the society. So, there are certain companies, certain manufacturing companies that pollute the environment, right? So now the government puts in place policies that are used to pin those companies so that at least they pay more in tax, and the impact of their activities on society can be cushioned by the amount of tax that they pay. So that way they're able to pay back to society for the negative impacts that their activities are responsible for. Sometimes even tax, like noise pollution tax for planes, because planes make a lot of noise when they are landing, so they also pay noise pollution tax. So tax can also be used to control activities that negatively impact the society. Any questions?
No questions.
Okay, so now we move to the categories of tax. So the categories of tax, we've got one in direct tax, then two indirect tax, then we've got three capital tax, then four revenue tax, then five progressive tax, six regressive tax, then proportional tax. So direct tax is charged directly on income. So it's progressive in nature, meaning it increases as income increases. So, for instance, income tax. So, for you as an employee, tax is charged directly on your income. So that's direct tax. So the payee that you pay as an employee, that's direct tax. Then even your business, your lending business, if you pay tax, then if the tax is charged directly on the income, that's what we call direct tax. So the more money that you make, the more tax that you pay. Then two, indirect tax. So indirect tax is paid when individuals make a purchase. They are regressive in nature, they reduce as income increases. So for example, VAT. So VAT is tax that is paid when you make a purchase, right? So the more money that you are making, when you buy something, you won't feel the impact of VAT. And that's why VAT is what? Regressive in nature. The more money you make, the less impact it has on your overall income. So that's indirect tax. Indirect tax is what? Paid by individuals when they make a purchase. Then capital tax. So capital tax is charged on capital receipts. For example, property transfer tax. So we're going to discuss property transfer tax in later in the study of taxation. So this is, for example, where you, Mr. Isaac, you've got a house and then you sell your house. Then those receipts that you receive from selling your house, tax is charged for the virtue that you've transferred ownership from you to the individual that purchases the house. So you pay a certain percentage, which is about 5% property transfer tax. So that property transfer tax is called capital tax. Are we together?
Yes.
Yes. Then there's revenue tax. So revenue tax is charged on revenue receipts. So revenue receipts, for example, your business, your sales, right? Turnover for a small business. So when tax is charged on that turnover, it's called revenue tax. So even you or your revenue as an individual, the income that you earn from your salary, when tax is charged to it, it's called revenue tax. Then progressive tax is basically tax that increases as income increases. Then regressive tax reduces as income increases. Then proportional tax is paid equally by all stakeholders. For instance, property transfer tax. Property transfer tax is 5%. So regardless whether you are the CEO of Zanaco or you are a layman like me who's just an employee, we're going to pay the same 5% if we transfer property, and that's proportional tax. Each and every individual, regardless of your status quo or economic status, you pay the same amount of tax. Are we together?
Yes.
Any questions so far?
No questions.
Okay, so this is just for knowledge's sake. What are the main sources of tax law? So the main sources of tax law, we've got one, statute. These are laws made by acts of parliament. So the members of parliament, they go to the August House. They make laws in relation to tax. Then in that way, we're going to have a tax law. If they say, okay, this year we want to give a tax incentive to all the mines. Let's say, well, they're going to be paying 25% instead of 30%. Then that law is passed in parliament, and ZRA is going to implement it. Then it's a tax law which is created by statute. Then statutory instruments. These are the delegated legislation made by government ministries. So ministries like the Ministry of Finance, right? The Ministry of Finance can want stimulation in the economy. They can want FDI, foreign direct investment, right? And they can formulate a statutory instrument that says, okay, all those foreign direct investors that come into Zambia, we're going to give them a tax incentive where in the first 5 years, they're going to be paying 25% instead of 30%. Then that's a statutory instrument that's in relation to tax. And ZRA is going to implement that tax law. Then you've got case law. So these are prior judgments relating to taxation. So if, let's say, you go to the High Court, then there's a particular case that's relating to tax, then the judgment that the judge from the High Court makes in relation to tax, that judgment becomes a law. That's what they call a precedent. It's a case law. In that way, that's why we also get these tax laws. Are we together?
Yes.
Yes. So we can carry on.
Yes, we can.
Okay. So now ZRA is the body that collects the taxation on behalf of Ministry of Finance. So now, what are the duties? The duties of ZRA, as I've outlined, is one, to collect tax on behalf of the Ministry of Health. So the Ministry of Health is like the finance department of the government, right? And how does the government collect its money via tax? It uses ZRA. Then two, ZRA ensures tax compliance by putting in place a fair, effective, and efficient tax regime. So now, for people to be compliant, you know, ZRA needs to think of creative ways in order to allow these people to be compliant to tax. So they have to put in a tax regime that's fair, effective, and efficient. And this is one of its duties. So to make sure there's tax compliance, right? Then the third, to advise government on tax related, or rather to advise government on matters relating to tax policy. So if a government is trying to make a policy for FDI, as I gave an example, right? The Ministry of Finance, Mr. Stumbeko Msokotwane, wants to, make a policy saying, okay, for all investors coming into Zambia, we want to give them a tax break of 5%, provided they're employing maybe 1,000 people, right? So now they need to seek advice from ZRA. Then they ask, okay, ZRA, what's the impact of this policy that we want to put in place? Then ZRA can provide their knowledge, then they can provide with the experience, then they can help the government or the Ministry of Health to put in place a proper tax policy that won't compromise the collection of tax by the institution. Then three, educate stakeholders on important tax matters, right? So to educate stakeholders on important tax matters. So yesterday I was walking to, I think, Comesa. Yeah, I went to visit a colleague of mine who has a shop there, right? Then I saw I think it's a banner for ZRA. So it's like a station. So ZRA has put in place a station just close to Comesa, where it's got its agents there, right? Then they've got brochures and different materials relating to ZRA, right? And I saw certain people going there asking relevant information, you know. So that way, ZRA is educating the stakeholders on important tax matters. So many people don't really have that knowledge, that concrete knowledge on tax. But ZRA, through its function of educating people, it goes in the streets and teaches these individuals on important tax matters. And that's one of its functions. Are we together?
Yes, we are together.
Yeah. Do you have any questions?
No questions, but just to add on the one that you've mentioned on educating stakeholders.
Yes.
I think they also visited our company about educating us on the smart invoicing and how it will be done and how they will learn everything, just to let us know.
Yes.
Yeah.
Yes. Yeah. So that's one of the key functions of ZRA. Well, thank you very much for the contribution. Okay, let's carry on. So who pays tax? So who does the liability of tax accrue to, right? So the liability of tax accrues to persons resident and ordinarily resident in Zambia. So which persons are resident in Zambia? So individuals who have lived in Zambia for more than 186 days, which is basically 6 months, and two, companies whose effective management is carried out in Zambia or the head office is in Zambia. So those are persons who are resident in Zambia. I'll say that again. So who is liable to tax in Zambia? These are persons resident and ordinarily resident in Zambia. Then persons resident in Zambia are individuals who have lived in Zambia for more than 183 days. Then two, companies whose effective management is carried out in Zambia. Then persons ordinarily resident in Zambia are individuals with the intention of staying in Zambia for more than 12 months. So sometimes in the exam, they're going to ask you who is liable to tax. Then you have to explain this concept. So you have to say the persons who's liable to tax in Zambia is a person who's resident and ordinarily resident in Zambia. So these they go together, resident and ordinarily resident in Zambia. Then you explain who's a resident person in Zambia, an individual who has lived in Zambia for more than 186 days. Then companies whose effective management is carried out in Zambia. Then a person who's ordinarily resident in Zambia is an individual with the intention of staying in Zambia for more than 12 months. Are we together?
Yes, we are together.
Yeah, so this is quite important. Make sure you grasp it, but with time you are going to understand it, right?
Yes.
Okay, so now let's understand what is meant by domicile. So domicile is just one of the words that is used out there. So domicile is a place an individual calls home. So there's domicile by birth. This is domicile which is acquired by birth. So we call Zambia home because we are born in here, right? Then there's domicile by choice. This is domicile which is acquired by choice. So you can go to Zimbabwe and you become a resident there because you decide to be a Zimbabwean. Then you become a Zimbabwean by domicile of choice. So this is just for knowledge's sake, but it's not really as important. Just like this is not very, very important because the persons exempt from tax includes the presidents, the chiefs, and the local authorities. So this is just for knowledge's sake, but it's not really important for exam purposes. So now, the administration of tax, right? What taxes are there? What taxes that do people pay in Zambia, right? So we've got payee, um, which is pay as you earn. Then there's self-assessment. Then there's withholding tax. Then there's presumptive tax, right? So payee, I'm sure you've heard of it. I'm sure you know of it. So payee is collected by the employer on behalf of government. So someone is working for a company, they're an employee, right? Then they pay tax. So instead of the individual assessing themselves and going to pay the tax to ZRA, the employee collects the tax on behalf of ZRA. Then they remit to ZRA once, maybe it's in a month, obviously a month. So when the month is done, they deduct the pay as you earn, then they remit it to ZRA. Then the self-assessment. So for self-assessment, the payer makes an assumption of how much profits will be made and tax is charged on that amount. Tax is paid in 4 installments within 10 days after the end of the quarter. So we're going to, when we start going through the computations, we're going to get exposed to what this really means. So self-assessment is usually done by those companies that are earning, I think, more than 800,000 kwacha per annum, right? So you project saying, okay, next year maybe we're going to make, say, 1 million kwacha, right? Then on that 1 million kwacha, you charge the tax rate, which is 30% company tax, right? And when you charge that company tax, you need to be paying it in installments. So you break it down. So you charge 30%, which is 300,000. that's of 1 million, right? Then you split it into 4 installments. Then you pay to ZRA each and every 3 months, each and every quarter, right? Then at the end of the year, you need to assess, you know, given the actual amount that you make, the actual profit that you make, then you have to charge the actual tax on the actual earnings that you earn. Then you have that total amount of tax. Then since you've already remitted a certain amount of tax to ZRA, you need to assess the actual and the tax assessment, right? The actual and the tax that you
Yes.
already paid. Then now, if the amount of tax that you paid, if the amount of tax that you paid already is more than the amount of actual tax that or the actual tax that is supposed to be paid, you know, it means you're going to have a tax asset. You're going to recover that money from ZRA. If the tax assessment that you made, the 30% that you charge on the projected income is lower than the actual tax that you are supposed to pay from the actual income that you made, it means you're owing ZRA the difference. But you get to understand when we start doing the actual computations.
Okay.
Yeah. Then withholding tax. So withholding tax is basically paid at source on income such as interest, rent, dividends. So when you receive interest, for instance, on an investment, interest from a bank. You've got a bank account, you've got a savings account, you deposit money there. Then when you receive that interest, you're supposed to pay a certain amount at source, which is deducted in advance, which is withholding tax. Even when you receive dividends from a private company, you pay some tax, which is the withholding tax. Then turnover tax. Turnover tax is paid by all firms that earn an annual turnover of less than 100,000. So if you're earning less than 100,000, you have to pay turnover tax. So if your revenue, say, is 100,000, you multiply it by the turnover tax rate. Then that's the amount of tax that you need to pay to ZRA. Then presumptive tax. So presumptive tax is a fixed rate of tax paid by entities in the transport business. So presumptive tax is paid every day, or sometimes it's paid every month, or even according to the arrangement, even on a quarterly basis. But all those companies and individuals that carry out business in the transport industry, they're the ones that pay this presumptive tax. But if a company is registered as a limited liability, it pays income tax or turnover tax. Are we together?
Yes.
Any questions so far?
No questions.
Okay. All right. So now, what are the penalties and interest for non-compliance to tax regulations? So interest is paid on late payments and underpayment of tax, right? So if you pay tax late, you're supposed to pay a penalty. The penalty for late payment is 5% of the amount that remains unpaid, plus interest on the overdue tax at the Bank of Zambia discount rate plus 2%. So this is going to make sense if we actually start going through the actual questions. For now, it's just for understanding's sake. Then for VAT, the penalty is 0.5 on the outstanding amount per day that tax remains outstanding. Then plus the interest on the overdue tax at the Bank of Zambia discount rate plus 2% per annum. Then penalty for late submission for individuals is 1,000 penalty units or 300 kwacha per month or part thereof. Then for companies is 2,000 penalty units or 600 per month or part thereof. So this is just some theory that you need to understand in case they bring such a question, or But I've seen some questions where they ask about this. So this is just some knowledge that you need to have. But when we start going through the actual questions and practicing, you're going to discover that it's going to be very, very understandable. All together?
Yes.
Okay. So now there's also another aspect that's called the tax appeals tribunal, right? So the tax appeals tribunal, what's the function of the tax appeals tribunal? So to determine facts whether a tax assessment must be accepted or discharged by hearing arguments of both the appellants and the defense of the Commissioner General's representative. So if you have any issues, maybe you feel like your tax assessment is not really accepted, sometimes maybe you might pay late, then the Commissioner General doesn't accept your tax assessment, you might take them to the tax appeals tribunal, then they review your case. Then two, any other matters prescribed by the Minister of Finance by statutory instrument as a matter against which an appeal can be made. Yeah, so but this is just theory that you need to just read and understand, but it's not really something that you need to stress about as much. But just for the sake of making sure those my theory questions, you hammer them, then you need to read this. Yeah, then there's one other aspect that I forgot, which is the quorum for the tax appeals tribunal. But I think I'll just send the notes about for that one. But it's not really something that's
Okay.
complicated. Just something that you just read in case something comes in relation to that, you can be able to answer those to my theory questions. At least you maximize the number of marks that you can obtain in the exam. So with that said, the first topic for tax is done.
Okay.
All right.
Thank you.
All right. So now let
Okay.
me show you some other things. So the other topic that we need to cover for taxation. So let me just show you in advance.
Okay.
Just a minute. So you can see my screen.
Yes, I can still see your screen.
You can see the Excel, eh?
No, I can't see the lesson we have